Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, consider subscribing if you haven't yet already. I know a lot of you guys watch my video, but you never subscribe. I'm pushing on 1,000 subscribers, definitely a landmark 1,000 subscribers. So if you haven't subscribed yet, consider subscribing. Appreciate it very much. Really helps out the channel. Give me a thumbs up. That also really helps out the channel, pushes my video, pushes my channel to other people. Guys, if you want to support the channel, consider using my link in the description below to sign up for Webull. If you sign up for Webull and deposit $100, you'll get 2 free stocks. I'll get 2 free stocks and you'll get 2 free stocks. If you don't have Robinhood, consider signing up for Robinhood. You'll get a free stock just for signing up for Robinhood. Also, if you don't have Cash App, consider using my link. You get, I think it's $5, just free money, $5 just for signing up with my link. So that really supports the channel. So if you haven't done that yet, if you don't have those services, consider signing up for those services. All right, guys, I'm going to try to make my videos a little shorter. I had some comments about my videos being too long. I'm sorry. There's just a lot of stuff to get through, a lot of my research. Believe it or not, I speed up my video when I'm editing it. So if my videos are too long, consider watching it in 2x speed on YouTube or 3x speed. I won't be offended, so consider doing that. You know that I value your time, so if you want to do that, there's an option to speed up videos, 2x, 3x, 4x, whatever it is. So I do appreciate you watching my videos. Really humbles me that people are finding value in my content. All right, guys, let's get started. The EV sector is on fire, like I said, led by Tesla. Tesla broke over $1,000, sorry, $1,700 a share today. So you could see the potential of Tesla being at 1,700, and I predict over $2,000 a share by the end of the year. As long as the market doesn't crash like it did in March, as long as the market kind of stays steady, I definitely do see Tesla being over $2,000 a share by the end of this year. That's why I put out that video about considering. I'm not telling you what to do, I'm not telling you to buy anything, but just considering, looking at all the research, watching other videos, considering getting into Tesla before August, because August, end of July, they're going to release their Q2 numbers, and they're very likely going to be in the S&P 500. When that happens, it is likely the stock will go up and go up massive. I'm not saying that that will happen. There is a chance that it could go down. So you never know what happens. But my personal thoughts is that it is going to go up after their Q2 numbers are released at the end of this year. Again, not advice. I'm not a financial advisor. I'm just telling you the facts. Their Q2 numbers are likely going to be positive, and they are likely going to be included in the S&P 500. And it is just a fact that a lot of funds will be forced to buy Tesla, and it's going to cause a lot of buying pressure on Tesla stock. So that's all I have to say about that. So this video today is actually about a EV company, a startup, or a small EV company. They've been through different transitions and different names. So they are a startup EV company, and so these startup companies, well, technically they're not a startup company. They've been around in a different name. They were called Dropcar before. It's like Dropcar merged with this company, and they were called AEV, Austin Electric Vehicles, before this. So their new name is Ayro, A-Y-R-O. They are a EV company, and they specialize in small EV vehicles. So they are a small market cap company, under $100 million. So you know, a very small company. So in these small companies, you're going to see a lot of volatility. Today they went down like 20% on their stock today. A few days before they were up 60%. So you're going to see massive movements on these small companies. So if you don't have the stomach for it, maybe just stay on the sidelines. But if you have the stomach for it, and if you have any 5 to 10 year outlook on this company, it would be something to look into. So let's get started. This is their company, Ayro. So they make these 2 products. First one is Club Car 411. So it's kind of like a utility truck. You could think like maintenance truck or food delivery truck. And so again, all EV, all electric vehicles. Their next product is the Ayro 311, and you could think kind of like in-city transportation, like a fun vehicle, like a rental, things like that. So they have a concept car. This is more rugged, like a 4x4. You know, you can think for like park maintenance, park rangers, things like that, or just outdoor, you know, four-wheeling, having fun, 4x4, all electric. So that's their concept car. So they have 2 products, and then this concept car that they are planning to release. Their leadership team is led by Rod Keller. He's the CEO, and he brings his experience from Segway. I think everybody knows Segway. Segway obviously is electric vehicle company, and they're really popular. I don't know, 5-10 years ago, but they just never caught on. I don't know exactly what it is. Maybe it didn't look cool. I mean, a lot of like tours. If you go downtown to a city, a lot of Segway tours, that is really popular, doing tours, but it never really caught on with the consumer. So anyways, he brings a lot of experience from Segway to this company. So this company is headquartered in Round Rock, Texas, which is basically a suburb of Austin. And that's just a couple of hours away from me. So I don't know if you guys know, but Austin is really outside of Silicon Valley, a hotbed of technology talent, a lot of startup companies. So they are based here. Ayro. Tesla is looking to build a factory. The rumor is a factory in Austin, Texas. Helion, another super popular company these past few days, they are based in Austin, Texas. Samsung, Dell, Texas Instruments, Nintendo. All these companies also have facilities. Even Apple has a facility in Austin. So a lot of technology and a very good work pool for all these tech companies is based in Austin. So here are their products. Here are the niche markets. So this are all the sectors that they're targeting with their vehicles. So like I said, food delivery, like grocery delivery. Think about like grocery store delivery, Instacart, things like that. Also Uber Eats, things like that, food delivery. Maintenance, like building maintenance, apartment building maintenance trucks, catering, like sporting events, like football stadiums, moving equipment and food, security, maintenance. That's their market, the market that they're targeting. So they're not targeting the consumer. They're not expecting that people are going to buy this and just drive it around town like their own vehicle. So they're targeting this specific niche. In like I said, maintenance trucks and things like that. So they have a strategic partnership with Club Car. If you guys don't know, Club Car is their parent company is called Ingersoll Rand. They're a multi-billion-dollar global company, and so one of their subsidiaries is Club Car, and they make basically this golf carts. They're probably one of the biggest golf cart manufacturers. So they're partnering with Club Car for their logistics and delivery, and so that's definitely a good partnership. Club Car has a lot of experience delivering these type of more niche specific vehicles. So they are also expanding their factory, expanding to handle up to 600 vehicles per month, increasing their capacity to 200 by 200%. That is just happening at the beginning of this month. So also they are expanding their financials. They did a capital raise in June for $5.5 million, selling their common stock at $2.50. So remember these prices that they offer their shares for these capital raises. So this was $2.50 back in June. They had another capital raise at the beginning of July for another $15 million. And the stock price that they sold was $4.75. So remember that, $4.75. So here is their balance sheet. So this is the balance sheet of Drop Car, because like I said before, Drop Car was the company that merged with AEV, which is Austin Electric Vehicles, to become Ayro. They have $3.9 million in current assets and $2.4 million in current liabilities. So that's roughly 1.6 times more assets than they do have liabilities. So definitely that is a pretty decent balance sheet for such a small company, and also a growth company at that. The company is losing money. They're a company that was looking to acquire another company and just basically become this EV company that they are today. So last year, 2019, their operating expenses was $644,000. This year, $773,000, and they lost a net loss of $1 million in 2020 and $1.9 million in 2019. So that doesn't really bother me. A company like this that's just expanding, building out their factory, raising money to take advantage of the market, you're going to expect that they're losing money. So that's kind of what you want to see in these type of growth companies, that they are using their money, they're expanding their factory. So that doesn't bother me that they're losing money, but I do see potential for this company. Here's their stock chart. So like I said, look at that big mountain there. They were trading at roughly $2 range. in the end of June, and then their stock just went up to over $6 just like last week, and so they crashed today and they went down roughly 22% today, down to $4.36. So $4.36. So remember, they just had a capital raise for $4.75, where they raised $15 million, and they were selling their stock for $4.75. Today, you could get this stock for under that price, for $4.36. If you can get this, I personally think if you could get this stock for under $4, you're in a good position. Like I said, they just did a capital raise for $4.75, and if you could get it now at under $4, you're going to be sitting pretty decently to weather out the storm, to ride the ups and downs if you get in at such a low cost basis. So personally, this is my position. Unfortunately, I did not wait until today to get into the stock. I really wish I did. I would have got it at these low prices. But anyways, I have a cost basis of $5.59 on this company. I only have $111 in this company, so I'm not too concerned about the loss right now. I'm not really interested in adding more to this company, only because I have an interest in another company that I'm going to cover on my next video, and that company is FUV, which stands for Fun Utility Vehicle, and the company name is Arcimoto. So if you guys heard of Arcimoto, basically they're kind of the same. They're making these EV vehicles, but overall I like Arcimoto better than I like Ayro, and so I am more interested in putting my money into Arcimoto. So that's why I'm only in this company at $111, and I'm not really interested in putting more money into this company because I'm really putting it into Arcimoto. So guys, consider subscribing if you haven't yet already. Give me a thumbs up, really helps out the channel. Thank you guys for watching. Catch you in the next one. Peace.